Greetings, market rebels. Welcome to this week's macro measure. It's actually Monday, February 19th, 2024, and I think it's about quarter to 1 p.m. here on the East Coast. I'm Wayne, and we're going to get into the brief macro measure this week for all those folks that look forward to things being shorter. This is your week, I think. Disclaimer, here we go with that, and then here we go with the intellectual property rights notice. And then let's make sure the share is working, just because I keep having this issue with, yep, we're still looking good. And then finally, we're doing it again because it really is still point counterpoint. You'll see that really in our discussion and with some of the charts, I think. But we'll get into just the brief notes for this week. Like I always say, I would set the playback to 2x and then go down from there if it's too fast. But just because it covers things so much more quickly and there's a lot to cover, but I had quite a bit of family type stuff that really impacted the weekend starting on Friday all the way through really still now, but things lightened up a little bit. And with it being a holiday, there's a little extra time this week, but I am also time pressured to get this out so that folks can try to watch this. And Ryan and I are still working on putting out newsletter ideas this afternoon. So we've got our hands full. And that's why I'm going to keep this extra short if I can. But I'll leave that up there just for another minute. A lot of it's the same as last week, but I think the big question now is that we have to add to this is that we're still seeing missing participants, right? We're not seeing everything really go as we did last year. Maybe it still will, but it hasn't yet. And so the breadth is less than stellar right now, which is not really horrible, but just not as ideal as we saw it before. And I think the other factor we've got to look forward to this week really is this kind of Super Bowl of EPS. I guess right now it's the Nvidia earnings release set for midweek, I believe. And I've got to wonder after that, what are the propulsion catalysts? So could that be the worst or most telegraphed top that we've seen, short-term trading top, or will it be sell on news, right? I would think the way that other stocks have reacted, that the Nvidia reaction probably sets up to be positive, at least superficially, but we have to see what kind of positioning develops between now and then and things like that. And who knows what they'll say, but that could be a big deal just because it could be the big kind of final catalyst. And with inflation sort of not being dead yet, now you've got your rate picture that's still up in the air, but even more so because I think the rates lower sooner story has taken another one on the chin. And so as a result of that, you're probably not looking at a cut probability wise through the May meeting. So it could take longer, and that means we won't be coming down by as much as soon as was expected yet again. And that doesn't seem to be good. But as of right now, TNX really didn't power all that much higher. Did have a little burst, but hasn't really gotten going. Could still. So we'll have to keep an eye on that. And the other thing I would look at too is that the way things have gotten and maybe a little ahead of themselves and with the lack of catalysts, maybe we are coming up on a time where it does make sense to be able to let a more significant pullback develop in the wake of the Nvidia release. So I would look forward to maybe some off the radar situation that's just not being discussed all that much to maybe start to become front and center because the gang will need some kind of cover story to justify why they're about to take stocks down. Let's say after making new all-time highs and going bananas to the upside, why are we suddenly down 5, 6, 7%, something like that? If it were to happen, I don't know what it would be right now, but just saying, keep that in mind. Maybe between now and I don't know, maybe the finish of February through maybe March, early April. We'll see. And then I would just keep reminding everyone the way Ron, not quite the way Ron Ianieri, our friend and who's passed on, would always do. But I think you really got to roll, as Ron would say, roll, but he would do it with much more emphasis. I think right when you get this extended in some things, you have to, but it's not as though the market to me is that way. I think the market has a lot more room to run. It's just, I don't know if it can do it in the short run. So that's what the charts continue to tell me. The trend remains up. So until we see some signs of something cracking, I'm really reluctant to fight against this in a big way. But having said all that, that's kind of the summary, I guess I would say, in terms of my just thoughts coming into this week. So on that note, I'm going to stop the share. Let's see if I can, well, no, actually what I'll do is see if I can make an adjustment here. Oh, that's not the screen I want. Let me get back over to screen. Where am I? Screen what? Oh, it doesn't like, is this considered screen 4 here? I think maybe. Let's see if it's not getting identify. Let's see what's happening now. Yep, that is screen 4. Okay. So yeah, I had a little issue and things have really flipped around when I overclicked as well, but things have really flipped around with my screens. So I'm going to pull this off and we'll move this out of the way. And then I'll just start covering the charts because that's really got to be the main focus given what else is going on here. I wanted to have some sectors viewable though. That's not the sector graph that I want though. I'll leave those alone up there. But yeah, we'll take a look at those in sector situation more. But I am starting out here with SMH. And the reason is probably obvious, right? This has been the leading sector. And, we've got this basic, simple resistance line we've had above the market action that we've had anchored there for some time now. And it goes back a ways. And you can just see how that line has been important in the past, I think, now. And so I'm looking at it saying it certainly may fall short of that, but then again, it may not. I've seen these things too many times in my career to say, yeah, it looks toppy here. It's completely done. It could be the case. I'm just saying that you give up on trends or start fighting them too soon before they kind of somehow reach their inevitable resistance line, right? That they ultimately reach. I've seen this happen too many times. I would call it uncanny. So it's certainly possible that they could break this thing down before then. But at the same time, I've seen when you have this kind of a line and a super strong trend that's been sustaining itself now for some time, that it's not out of the question for this to definitely get closer to that resistance line, which I'll now highlight in blue there. So with that being the leader, that in the short run, that tells me there's still more potential for the market to go being led by this sector, which has been the leader. So let's see. Let's now dive into SPY. Well, I'll go to Qs then SPY since we're talking about tech here. And the Qs have kind of done their thing, right? They've got really close to one of our lines and then they've sort of backed off. So now they've got this lower high put in and you're at risk, I think, if you fall below that 20 there in light blue. I think that's your big number there. Now, clearly there's a little bit of support right beneath there. You could call it 424 or something like that. But this is, I think, where the danger starts, losing that 20-day. As a reminder, these guys are great at taking something, right, barely dipping it below and then reversing it. So be careful should that start to play out that way. But they've got the catalyst in the form of NVDA if they want to, that EPS reaction. It would almost be too predictable, right, if they spike that and all these other stocks on it, and that becomes your ringing of the bell to sell because of the extremes that those things could reach and the extreme reactions that could be possible. Having said that, right, even though it seems too obvious and easy, it could still play out that way. So again, we don't want to rule things out. I think being open-minded and just kind of thinking about what possibilities are out there and what the market typically does is not a bad exercise to go through. I mean, that's a lot of what we go through. But remember this big pattern we talked about? I think it shows up better on the cup and handle shows up better on the weekly, just a lot more compact this way and still looks visible. And maybe it's not the perfect cup, but you get the idea. It doesn't have that really nice rounding bottom. It's got this kind of spike in here that some people would say negates it. But again, I don't really get caught in those weeds that much. Some people are sticklers and they have their reasons, I would say. But look, this thing fired, right? We said this is a good pattern. It fired. There was an initial pullback sort of towards support. And then after several weeks of running, and then the bulls got a hold of it and it's been gone again. So this projection that I'm working with on here works out higher, just like SMH. There's a little bit more room here. And it doesn't mean, right, we tend to take the news we've got in front of us and try to work with it and usually for good reason, because I think that immediate news is what you have to work with. That is what the market tends to focus on at times. And so a lot of the times, but they could still reach this or even higher naturally. But it might take a wrinkle right before we get there. So I don't want to extrapolate it and say, well, it goes there immediately. But you would think, right, if they're going to put an exclamation point on this rally to the upside, uh, the Nvidia EPS and so on and so forth certainly seems like it could be something that would make that possible, where you get this just one final kind of take your breath away. Things were already overbought. I can't believe they even bought them up from there in a big way. And that would kind of blow people's minds, and that usually, basically becomes your blow off top type thing in the short run, and then you start to get some retracement. But we don't know if we're going to get more of a pullback where the news is too obvious and they pull this thing back in the shorter run, potentially hold it, right? You've got even your weeklies, you have a lot of rising SMAs. And so normally, right, with a rising SMA, it's probably a little bit more bankable, right? Because that's the direction of the trend, and the SMAs are just trailing it. But it's probably falls into some of these potentially, and then maybe they start gearing up again. Hey, maybe we start getting the news that hey, the second quarter is actually tracking. The first quarter tracked really well according to the Atlanta Fed projections or something like that, and second quarter is off to a decent start. And then we have earnings coming up, and they extrapolate into there. Remember that during this year, things are usually, I think, okay, but you kind of cool off as the election approaches, then start picking up again. Right in the wake of the election, they usually come to terms with whatever's happened. That assumes everything goes according to how it normally would go. But really, you're at 70 on the RSI, even though you backed off here in the Qs on the weekly. And so when I look at it now, right, the only things that are really overbought because of what we just had are just your bigger picture of things like your monthly and weekly. That those aren't going to be so affected right immediately by this little kind of pullback that we had. But it did take a lot of the short term overboughtness out. So if you're a bull, you have to like that, and you have to like the fact that you're still above the 20-day here in light blue on your daily. So there's a lot of good things I think still in place. They are holding. I would give the benefit of the doubt until they do. I do think though that I'm starting to see some signs of concern that are starting to creep in a little bit more, and I have seen some UOA that's a little more creepy as well. But that's not always immediate. Usually when they show up in a big way to do hedging in the major index ETFs, usually something follows. Not long after, not maybe immediately, but not long after. But on that note, right, that's how we're climbing right there. And this has been, just your kind of ugly reaction to CPI, and they recovered and really closed the gap on that. So I think you're back into where you're watching things, and you could chart all day long, but that the Nvidia EPS has the potential to just be a really big market mover one way or the other. So I think you want to look at this support line on the daily. The 20-day on the daily is pretty much it. And then your 20-week moving average as well, and start to see if you fall below those, you could be on your way to. There was a lot of it was priced into Nvidia. things got crazy. It already priced in great stuff. Obviously, it's done so well, and therefore it didn't deliver the big surprise upside move that a lot of people were anticipating. That certainly could happen. But on the flip side, the charts still say that there's an uptrend, and the charts still say that uh, this is cooled off, and it does have immediate potential to rally because it's got a lot more room to be able to do that without really getting anywhere near overbought in the near term. It's got the big catalyst coming up, so it would be something notable if they were not able to start rallying it. But the other factor you have to consider is what if they put the old dip in front of Nvidia in the overall market and then use that to get fresh shorts that think it's cracking, that think it's breaking down. So you're at a tricky time. That's why I'm saying if you get good movement, I would just roll. I think it's got the potential to be one of those weeks where they really monkey around with stocks, and you've got a lot of maybe pitfalls you've got to jump over, things you've got to dodge, to get there, to make your way to a nice week. But that's the whole problem when you have something that's this big of a deal. This stock reporting right now is a really big deal given the frenzy in terms of the psychology of it all. So in my book, I've seen this before. This kind of reminds me of the late 90s when some of those really popular stocks of the day were reporting, and it would really dominate the market's discussion. It would dominate. Everyone was talking about the internet and what was going to be happening and how it would change everything. And it's kind of the same type of frenzy. And it's good to buy the early hype. It just start when you get in the latter stages of hype, it can be dangerous. Probably still in a big picture view, you're probably still in the really early stages of hype. But as far as the markets burst from this hype, I don't know if you're really still in the early stages. You might be at least in middle innings. We'll see. That's one good thing about the stock market. We get to see how things play out, and you can, at least in retrospect, know where you were innings wise. But this looks somewhat similar to the Qs, right? This is another situation where bigger picture overbought, but because it had that rough CPI day, didn't really finish on a great note, therefore not that overbought right at the moment. So again, has potential. You can see it's a very similar chart. So you could say, well, where's your support? I mean, I'll highlight the line, but that's pretty much your 20-day again, right? So the 20-day is looming large right now on both of the biggies. And like I said, if we wanted to go look at bigger picture, this still, in my book, has a lot of room to run if it wants to. If you say, well, where can this go to? I have the upper white line there on this one, and again, to get all the way up there, it's quite a bit away at this point. But you could say, well, that's still a nice little pop into the future, right on the daily. I don't know if it does it right here and there. It kind of got rejected here, sort of at the mid channel, if you will, between this and this. Oops, sorry, this one, not that one. This in blue and then this in blue. And it kind of got rejected there at mid channel, so it had a hard time. Brought it back down towards the lower, obviously, end of the channel, and they bounced it back towards the mid. So keep your eye on that. If it can't get through the mid part of this channel, that was also not a good sign. But if it does, there's a really good chance that this line up here would be something we probably have to extend. And in doing so, right, that would give you an idea of where this thing could move to in the future. And I still see several more percent of upside in the short run. If you look at bigger picture type things, you'll see, there's a lot of potential still here. So there's just the immediate trend view. I'd have to crunch down for us to give us more time to look at it, and more of a longer term view, which is probably beyond the scope of what we're trying to do. But there's still potential there. I mean, that's the point I'm trying to make. So as much as I think there's a great disconnect, and the disconnect may be in some ways growing ever wider between where stock prices are and how many optimistic takes are being priced in, and for what reasons and why. and the fact that I'm not so sure inflation is completely dead yet. All these types of things to me make it a risky market. So I think under the surface of all this celebratory stuff, there's a lot of risk that, and the market's doing a great job of having people become complacent again. I kind of feel as though there's a lot of complacency building out there too. So this again, we'll go on to another index in the form of an ETF. This will be the Dow, and I think the Dow is really, you can see that the Dow has really not performed to the extent of the Qs and the SPY. So I guess if you're a true believer, you think the Dow can ignite and start to catch back up and really outperform, and it very well could, right? I'm not saying that it won't. It is though still overbought on a weekly basis, while it's not on a daily. So if it does try to start to run, it's got plenty of kind of mid-level RSI readings that say, well, before it gets anywhere near overbought, it could run for a while. So there's that factor on it. It's holding above all SMAs, but you can see, right, because this breakout from the consolidation was nice initially, but it's really kind of for the last few weeks kind of leveled off, right? We're just about where we were early in the month. I mean, I think there's here you are on 3846.42, and here you are at 386.19. So you're barely, you're effectively unched from 2 weeks ago in terms of calendar weeks. 14. Well, at this point, I was thinking from expiration day from Friday, but yeah, I guess you're a little like 2.5 weeks at this point, and you're unched. So that's one reason why RSI is really nowhere special. And you've got to look at this and say, well, I would take the Qs. I would take the key from the Qs and the SPYs. If those keep going, these guys that move money, that move stocks, will probably talk themselves into chasing some of these names into play some of that catch-up game, realizing or thinking at least that these are relative values versus some of those other bigger names that ran much, much further. So don't know, if that turns out to be the wisest decision in the long run, but in the short run, I've seen those catch-up trades work really well when other leadership things have really powered. And if they continue to power, again, I feel like the market, to my knowledge, the market's running short of catalysts after this week, though, and I think that's why you have to be on guard even more. If you were at DEF CON, say 3 last week, you maybe are at 2.5 or 2. And if you get very extreme reactions, you've then got to really be ready, I think, because that could be much like, I think it was was it SMCI, the stock that had the massive reversal. Yeah, I mean, this is what can happen, right? This is a daily chart, and there's Friday, and you're trading a few pennies shy of 1088 at one point, and then at the end of the day, right, you're trading just a dollar, nearly only $1 above, or a couple dollars above 800. So that's the kind of thing. This is exactly the kind of thing that I had in mind the last few weeks when I've been trying to encourage folks to roll, because this happens fast, and that's been my experience. It tends to happen very fast, and a lot of people get caught off guard. A lot of people are lulled into that complacent way, and you've got to be disciplined. If you kept getting $20 bursts in that stock and you were riding it, right, just keep rolling. I mean, it's very hard to predict exactly where something will top out. It's even harder to predict exactly where it will top out and reverse and then drop down to. But the way to protect against that is obviously to be someone who, every time there's a big leap, you just roll again, you roll again, you roll again, and you may be able to pocket a lot of money even if you do get caught in the end and completely get smoked on that final roll. But this is in the back of my mind, just having traded through so many things, right? That's what I'm trying to warn against for people, like, just don't get caught. But anyway, I do think this does look really good in the sense that it's not overbought. So if they do deliver some sort of somehow they continue with this bullishness, through the Nvidia EPS release, and we get this real frenzy to close out the week potentially. just blow off top. This could start to have some names that catch up in there. By the same token, because it isn't performing, right? It's kind of lost its luster a little bit. If you do get reversals in some of the leadership, this could be quickly under pressure, right? You would look at that 20-day there in blue, and then you'd be looking at that recent low. Now you've got the 50 not too far below there, so I don't know if you just start crashing, but I'm just saying that you've got to be on the lookout now, because you have a situation where uh, this thing had its chance. The market seems to be running low on catalysts, if you ask me, after this week. I don't know what they're going to look forward to. You could say, well, the March Fed meeting, yeah, maybe the language changes, but it doesn't seem like, based on the probabilities that I saw, that the rates are changing. And that's just the cold hard reality of things. The other thing is, right, we've been talking about IWM, getting over here to IWM on macro measure, right? This is sort of a breakout attempt. It's been messy, right? This has this is lagging so much, right? So much has pulled so far away. But this is one of the real flies in the ointment for the people that are complaining about what this market lacks. And like I said before, I don't disagree with them. They do seem, some people are out there trying to find every reason to never like the market, while other people are always finding every reason to always like the market. So I'm not a fan of either of those camps, but I do think the camp that's just trying to be practical and objective and work with what you have, that's the camp I'm the biggest fan of. Because, right, the ultimate goal in this is not to be right or wrong about a forecast. It's to use these charts and what you see here, how things develop, to profit in your trading, right? And to minimize your risk and minimize losses at times too. But this has been a messy breakout attempt, right? Boom, looking great, pulls back very quickly, right? Severely on that CPI. This is what I mean by, if you look at this big strong March, if you kind of get that for a couple of days, and then they really kind of pin everything on some crazy high post Nvidia, right? Some short covering reaction, whatever the case may be. Remember, the SMCI chart we saw, and something like this can happen, right? Where if you play the game a little too aggressively and you're not being disciplined, all those profits can be gone if you even got in on a nice level, right? And you then blow your chance to really roll. You could be right back to where you started and then some quickly. And so just that's part of what I wanted to warn about this week. But look, not a good Friday, and you have make a new high off of that secondary burst, but not a good Friday. So I think what you're doing now is you're just going to wait. I think you just have to play the breakout game above the Thursday high and below the Thursday low, since this was an inside day. I mean, I think that's what you're doing. You can take your cues from maybe TNX, maybe the dollar, maybe and what the other major indices are doing. But clearly the problem here, which is why we always discuss TNX and rates, clearly it's the fact that rates have not completely just died off, put their tail between their legs and just packed it in completely. The fact that they're still up here threatening. And there are some people that are making the argument that there will be a resurgence of inflation, which will put the entire rates lower sooner, even, a little bit later than a little bit later argument to bed. They're claiming that you're not going to see it happen this year because inflation is going to be sticky for a while. I don't know. I mean, that's something I don't have the time to go even look into in a meaningful way. But I'm just saying that some people are out there with that story. It doesn't seem like the craziest story to me, but at the same time, I can't really attest to its validity. So with that in mind, that's probably right. The fact TNX is sort of reflecting that the dollar moving back up. We always say this, but dollar and TNX moving up, usually not good for stocks. Stocks have managed to really generally keep going despite these moves. That's, I think, because they're not anywhere near concerning highs. It's just more or less so far kind of been a retracement of a correction, right? So a correction of a correction. And now they might roll over again. But if they don't and they start taking things out, right, that's when it will start to get a little bit more dicey. So I continue to say, if I'm you, right, I'm trying to keep my eyes on trading, trading within this market right now. I'm keeping my eyes on those two to make sure that they're not steekily moving up, and hardly anyone's talking about it, because that could pose a problem. That could trigger some profit taking. That could trigger more of a blow off. But I think we can see the IWM this way too. And we said, right, it's really got some potential if it starts to get going. It just needs to be able to break out. And anyone that charts knows, right, the longer you've been in really some sort of a consolidation like this, somewhat of a rectangular consolidation or channel, right, over the course of the last really couple of years, you spend that long there and you finally start to break out. This could really be a good sign, but it's not doing it yet. You've got to be careful about the double top factor. If it does reverse from here, right, you will potentially be coming right near the former high. You're losing a little bit on your oscillators, right? So they're not as strong as they were on the last reading up here. So there is a little bit of negative divergence creeping in there. Not the best look, but that is certainly not a lock to always play out to the downside. But this is to me, again, like I said, obvious as to why this has struggled. These are companies that are dependent upon financing, right, and rates more so than the big dogs. So that's part of the issue. We also have a lot of zombie companies that has been talked about for many years, right, that are kind of this type of size that would be in the Russell 2000, and they've been able to stick around because we had low rates for so long, and low inflation for so long, and according to the authorities at least. But now we do not have low rates, and certainly do not have, even according to the authorities, do not have low inflation, which is again understated by design. Pretty much anyone that's ever looked into it can see that, and anyone that lives in the real world can feel that without even having to look into it. But that's your concern. I mean, this does look, to me, looks good, right? Overall, I'd say at this snapshot in time, this looks really good, and it's not anywhere near really overbought yet. So it ought to be able to do a little more work before getting overbought. But you've got to break out, and you've got this little issue again with the possible double top. So this is a tough one, and it's also a good sign that it's sort of bottomed here and has been rallying kind of from a much higher point. So it ought to be able to really put something together. I think if the rates and inflation take the opposite turn from what we've discussed so far, and the rates roll over and inflation looks tame, and the Fed maybe looks like they're going to cut sooner than later, if that all flips around somehow, then yeah, I think that could help. How that would happen in the short run, I don't know. Probably some sort of a crisis would have to develop. And let's face it, the market loves a crisis, just like the politicians love a crisis. And they know that what that means is the latest injections of trillions and trillions of Austin Powers type dollars into the market. That's the new thing. And at the drop of a hat, any signs of anything, you just start shooting a couple $1 trillion into the economy somehow, and ask questions later, and then complain that you didn't cause inflation. Now you don't know why you're getting blamed for it. But that's where we're at. Unfortunately, that's the sad state. But I mean, this is just looking really good if it can break out. And again, would that really be able to work inside of a week like this, where maybe, right, your technicals aren't worth what they normally are worth? They're worth something probably still, but can you bank on technicals when you have this big emotional sort of EPS Super Bowl event that we're having in the form of Nvidia, the stock of the moment, stock of these times, and for the obvious reasons? And that's now front and center. I think that's the hard part right now. Let's take a look at the Mag 7 as a package, and that does seem like it's stalled a little bit to me. And we will get into Google, Meta, MSFT, NVDA, and then someone's going to say get rid of Tesla and start putting something else in there, maybe like Netflix or whatever. But stalled out a little bit last week. Still, right? We talked about how I think it was months ago we were this looks really good. It just keeps acting well. It made a new high, but did not close well at the end of the week. The whole package, but there's a couple in here, right, that I think do look a little concerning. And one, of course, would be Apple. These Apple and Microsoft being big dogs, but that's right near the 50, right? And it just hasn't been able to do much. Remember, this is the 50 week. So let me I'll flip around to daily. So there's levels that, that folks can work with, but that's near believe the 50 week, but I still chart that. But now, right, you're below the 200. Now, this has been something that they've used very well to pull in probably new shorts or flush out weak-handed longs, and then reversed it many times from here. So again, you always have to be on guard on that. But if that playbook isn't used again, or they try and it fails, that's looking a little concerning, right, for Apple to be dipping below the 200. When it comes to Microsoft, this was going gangbusters, but you can see too, that's on the verge, right, of maybe losing this support shelf that's near here. You could say it's right near 400, but it's lost the 20-day, and the 20-day and 10, 15, they're on the verge of rolling over. And there's a big gap, obviously, between those and the 50, which is gold, and of course a larger gap, in terms of where it would be to fall towards the 200. But remember, this thing possibly dropping these are problems for right, for the Mag 7 and just for weightings. So keep some of that in mind. I don't want to have to go through all of these, but just keep that in mind, that's where we are on things. One thing we look at macro wise is we look at the oil future, and you can see that is still kind of creeping its way up towards this top part of this channel. And you could almost use that 150 SMA right there near 80. Let's just call it 80 just to round it off. But maybe, right, if you get above 80, that could start something. But that's slowly but surely working its way. It's been a rough area to trade. I kind of feel fortunate that I've put a couple ideas in here and there in UOA Pro, and there's been a lot more paper at times than I've actually added, just because I just was waiting for this to maybe do something, start showing better signs. I would say, look, it's showing a little bit better sign now, but we really need for it to break out. At this point, you could get a little bump out of it, but that would maybe be a good sign, right, in terms of the economy and things picking up. And then again, it's probably not going to help the inflation story. So there you have that. As far as other things go, I'm going to probably say I'll leave a lot for this for the sector situation video, but XLF, this is an interesting one. Had a couple bank ideas we put in. This is trying to break out from that little shelf that it was on for a couple of weeks, and this could move up further. So financials moving up, that's a good sign. Even the transports tried this week, which was a good sign, but they did kind of have a rough Friday, but they kind of absorbed the market CPI issue and moved right back up again. So that was a good sign. And the same thing really happened with discretionary. So overall, there was a little bit of maybe very sort of like dip your toe in a little tiny bit more risk on than there had been, which is usually a good sign in terms of the overall good sign. And things are, money is still being allocated that way, as if things are really going to improve and pick up. So maybe they will. Maybe the market's really onto something, or maybe it's looking very far ahead right now. Who knows? Maybe it's looking too far ahead. Maybe it's ahead of itself. I guess we'll only find out in time. But these are things that are just continuing to work, and that's usually kind of risk on for now. So that's the kind of the good story that I'll cover more in sector situation, I think. But some things, naturally, I think XLI has gotten a little bit up there. It's a little bit on the frothy side. All these things just had a rough Friday and didn't close well. So I think the big summary conclusion would be that you're going to be stuck dealing with this at midweek. And I don't think there's just no way around this. And it's almost like I said, it's almost too easy to say, well, they probably jam this stock, and they punctuate this incredible rally that's transpired in here and in the market and in SMH with this just awe-inspiring jam job, right? Look how vertical this thing becomes, and maybe they get it a little bit further, maybe a lot further for all we know. And it does really remind you of these other periods in the past where stocks, these tech stocks, have just gone absolutely bonkers. But this certainly could do that. But I'm also thinking it's almost a little too easy for that to be the case, just because, right, that would probably reward every Tom, Dick, and Harry that's out there, and they would all be rewarded for the obvious. Now, it does happen that way sometimes, but you're already probably through your resistance line there. But I still think there's a little bit more room based on projections as to where that could go to. So I would say I think 760 is the number we've been working with. That's probably my top. 761 is my top number for now on that one. I probably will stick with that. So that would probably be a great disappointment uh, if that's all it got to for some people. But given the run that it's had, it's hard to be really too disappointed. Remember, let's see where the low was here. Here you are, right, with about not even 18 months ago, less than that, and you were at what on that day on the low? 108, right? So you're doing okay. You're doing okay if you were in there or held there, if you held to this point. Um, but yeah, it's this. So this is the big thing to watch, and I think this is going to dictate the week. I mean, that's the problem with getting really precise with charts this week, because we all know this is what could really make or break the week in terms of the leadership area, in terms of how people judge if risk on still in vogue or risk off is now going to supplant it, that kind of thing. So we'll see on that reaction, but I'm going to wish everyone good luck. I think you just got to be really smart and disciplined. And I think when it's easy, right, and things are running and grinding, that's one thing. But when you have news events or Fed things, you really have to watch yourself. And when you get extended the way we are in many things, like we were in SMCI, right, something like that, you've got to then realize that you're in something that's not normal, that doesn't usually last very long, and you've got to make your adjustments at a fever pitch, right? That way it lets you keep playing with confidence and not worrying too much about your position. And at the same time, hopefully you're doing well on profiting and you're able to absorb the inevitable sort of turnaround that happens, and happens very swiftly. Remember, a lot of that happened inside of really one day, right? So if we look at where things were, there you are, right, just after the opening, and here you are by the end of the day. So within one day, just think of that market cap flip, right? So that tells you you're not in your grandfather's stock market. You're kind of back in some crazy kind of behavioral stock market that, like we saw in the very tail end of the 90s. And when you're in that, again, you have to ride it to capture, but you can't ride it blindly. You've got to ride it right very carefully and with discipline, and it can still work out really well for you. So that's all I'm guarding against. And I think NVDA could turn out to be the dud that disappoints everybody. We can't fail to remember and to mention that, right? That just because it's done so well, but you got to think one way or the other. The gang usually tries to take advantage of a big thing like this to create movement one way or the other. So I would I would kind of bet against dud. Excuse me. I don't know if this I can't say that means buy the straddle. It's probably priced very high, so that's probably a tough one too. But I would just expect that they've got to do something with this one way or the other, unless they really do choose to disappoint both sides for a change. But on that note, I'm just going to wrap it up and say thanks for tuning in. I hope something I share with you helps you out this week or some week in the future. I'll be getting on sector situation right away. Everyone, I hope you had a great, little bit longer of a weekend, and we'll be in touch through updates and webinars and the newsletters, etc. Thanks again.